Is quantum computing about to explode, or are we looking at a bubble ready to burst? Are these the stocks you should buy in January, or should you stay far away from this futuristic technology? Let's dive into the world of quantum computing and find out if these stocks are worth your investment.
Hi.
In today's video, we're going to explore the quantum computing revolution and whether stocks in this space are a good bet for 2025 and beyond. Thank you for watching, and please subscribe to my channel, The Finance Savvy, for more updates and insights on all things investing. If you have any questions, feel free to reach out. Let's dive into the video. Quantum computing's roller coaster ride. Let's start with a bit of a background here. Over the last few months, quantum computing stocks have been on quite a wild ride. Stocks like Rigetti, RGTI, Quantum Computing Incorporated, QUBT, and IonQ saw meteoric rises in late 2024, surging as much as hundreds of percentage points in just a few months. In fact, they were outpacing even some of the hottest AI stocks. So, what fueled this excitement? Well, it all started with the idea that quantum computing could revolutionize how we process information, especially in AI applications. And when Google introduced their new quantum microprocessor, Willow, the hype skyrocketed. Analysts and investors alike began to believe that quantum computers could be the secret weapon for AI, able to handle much more complex calculations in a fraction of the time. It was a heady time for quantum computing, with Wall Street dreaming of a future where these tech wonders could solve complex problems, like encryption issues in digital currencies, drug simulations, or even more accurate weather forecasting. But 2025 tells a different story, and it's a cautionary tale. The reality check, Nvidia's warning. Fast forward to early January 2025, and the same stocks that were on fire have now cooled off significantly.
Why?
Well, Nvidia's CEO, Jensen Huang, had a bit of a wake-up call for the quantum computing community at the CES 2025 Tech Conference in Las Vegas. He basically said that commercial quantum computing is 15 to 30 years away from being a practical reality. And that, folks, was the spark that ignited a sell-off. In the days following Huang's comments, Rigetti, quantum computing, and IonQ lost up to 60% of their value, and for good reason. Nvidia is a leader in computing, and when he speaks, people listen. So the million-dollar question is, should you buy the dip on these quantum computing stocks, or is this all just a flash in the pan? Let's dig deeper. Understanding quantum computing, a double-edged sword. Quantum computing is still a relatively young field, and it works on the mysterious principles of quantum mechanics. In simple terms, these computers leverage quantum bits, or qubits, that can exist in multiple states at once, allowing them to solve incredibly complex problems that traditional computers can't touch. Sounds like sci-fi, right? But it's real. And the applications are potentially enormous. From drug simulations to complex financial modeling, quantum computing has the power to accelerate industries that rely on heavy computation. And let's not forget the huge excitement over the potential to break encryption, which could shake up industries like cybersecurity and digital currency. But here's the kicker: the technology is still in its infancy. These quantum systems are fragile, temperamental, and ridiculously expensive. Quantum processors only work in highly controlled environments. Imagine a computer that only functions in a vacuum, kept at near absolute zero temperatures. Sounds fun, right? Not exactly. On top of that, they're plagued by errors. When a quantum system interacts with its environment, it can completely mess up the entire computation process. Right now, scientists are still figuring out how to scale this technology and make it reliable enough for commercial use. The fact that Nvidia has weighed in saying this could take decades to fix gives us a pretty clear picture of the road ahead. It's a long one. The companies, big dreams, small reality. So, who exactly are these companies trying to make quantum computing a reality? Let's break it down. Rigetti, RGTI. Rigetti is one of the smallest players in the quantum space, and their recent surge came largely from hopes that they could be the ones to crack quantum computing first. Rigetti stock exploded when news about Google's quantum microprocessor came out, but the reality is the company is still in the research and development phase. They're not generating much revenue, and they're not likely to see big profits anytime soon. Their valuation doesn't reflect the current state of the business, which is a bit worrisome for investors who got caught up in the hype. Quantum Computing Incorporated, QUBT. Quantum Computing Incorporated has been around for a while, but their technology is still far from the commercialization stage. While they've developed some interesting quantum software, they're a long way off from offering anything close to practical quantum hardware. For now, they're playing catch-up to more established players, and they're not generating meaningful revenue to justify their sky-high stock prices. IonQ. IonQ is a bit of a mixed bag. They've made some progress with quantum hardware, but they're still years away from making a marketable product that businesses can actually use. IonQ has a lot of promise, but again, they're in the R&D phase, not yet selling a product, and their financials aren't looking pretty. IonQ has also been heavily affected by Huang's comments as it continues to burn through cash with little to show for it. Should you buy the dip? Now, let's get to the important part. Should you buy the dip on these quantum stocks, or is this a market that's just not ready for prime time? Let's be honest. The excitement around quantum computing is still largely speculative. The potential is huge, no doubt, but we're talking about a technology that's 15 to 30 years away from being commercially viable. These companies have little to no revenue and are bleeding cash as they chase after a very distant goal. So, while the technology is promising, the financials are far from it. Investing in quantum computing stocks right now is a high-risk, high-reward game. If you're someone who has the patience to wait decades and you're okay with high volatility and potential losses, then maybe these stocks could be worth a small portion of your portfolio. But for most long-term investors, I'd say steer clear, at least for now. So, to wrap up, quantum computing is a game changer. There's no doubt about that. But in 2025, it's still a decades-long game, and we're nowhere near seeing the kind of returns that would make these stocks a smart investment for the average investor. And while we're on the subject of should you buy quantum computing stocks in January, the future of tech investments, let's not overlook another key player flying under the radar. But first, what if I told you there's an AI company that could make history by becoming the first $4 trillion stock in 2025? Spoiler alert, it's not Apple or Microsoft. The crown might just go to Nvidia. But what's driving this meteoric rise, and is this a good time to invest? Let's break it all down. Hi. In today's video, we're diving deep into Nvidia's incredible potential to become the first AI stock to hit a $4 trillion valuation in 2025. Thank you for watching, and if you're new here, don't forget to subscribe to The Finance Savvy for more updates, insights, and all things investing. Let's get started. The $1 Trillion Club. Let's start with some context. Right now, there are only 3 companies in the world with market caps of at least $3 trillion: Apple, Microsoft, and Nvidia. While Apple is in the lead with a valuation hovering around $3.8 trillion, Nvidia is the one I think could outpace the rest and reach that $4 trillion milestone first. Why? Well, the answer lies in one word: AI. Nvidia has positioned itself at the heart of the artificial intelligence revolution, and the company's dominance in the GPU market is giving it a massive edge. But before we get into the how, let's take a quick look at the why. From gaming to AI kingpin, Nvidia's story is nothing short of remarkable. A company that once focused almost exclusively on making GPUs for gaming has now transformed into the lifeblood of the AI industry. These GPUs, initially designed to make video games look stunning, turned out to be perfectly suited for the heavy computational demands of AI development. Over the past few years, Nvidia has faced little competition in this space. They've captured nearly 90% of the GPU market, a staggering figure. And it's not just about market share. Nvidia's GPUs are so advanced that they've set a standard, enabling them to command sky-high prices. This pricing power has led to record-breaking revenue and profit growth for the company. Why Nvidia could hit $4 trillion first. Now, let's talk specifics. What's going to propel Nvidia past that magical $4 trillion mark in 2025? One word: Blackwell. Nvidia's upcoming Blackwell GPU architecture is the next big thing, and it's already generating enormous buzz in the tech world. According to industry experts like Beth Kindig, production of Blackwell GPUs is expected to triple between late 2024 and early 2025. Triple. That kind of growth signals one thing: demand is through the roof. These GPUs are designed to handle next-generation AI workloads, from large-scale data analysis to generative AI applications that are becoming increasingly essential across industries. If Nvidia can deliver on the promise of Blackwell, it could solidify its place as the go-to provider for AI infrastructure, pushing its stock price and market cap into uncharted territory. The competition: Apple and Microsoft. But wait, what about the other trillion-dollar giants? Couldn't Apple or Microsoft reach for $1 trillion first? It's possible, but here's why I think Nvidia has the edge. Apple has some exciting developments, like the iPhone 16 and its new AI assistant, Apple Intelligence. But these are more evolutionary than revolutionary. Apple's growth is steady, but not explosive enough to match the momentum Nvidia has in the AI sector. Microsoft is another strong contender, especially with its Azure cloud platform and investments in AI tools like ChatGPT. But again, its growth trajectory feels more diversified and less concentrated on a single megatrend like Nvidia's dominance in AI hardware. In other words, while Apple and Microsoft are growing, their potential upside doesn't seem as dramatic as what we could see from Nvidia. How much growth does Nvidia need? Now, let's crunch some numbers. Nvidia's current market cap is around $3.3 trillion, so to hit $4 trillion, the stock would need to climb roughly 21%. That's no small feat, but it's far from impossible, especially for a company like Nvidia that's been riding the AI wave to new heights. In fact, Nvidia's stock already surged by 170% in 2024, so another 21% increase feels well within reach, particularly with the rollout of the Blackwell GPUs. That said, it's worth noting that Nvidia did execute a 10-for-1 stock split earlier in 2024, which increased the number of outstanding shares. This means the stock is less likely to see massive single-day jumps in value. Instead, I predict we'll see steady, incremental growth throughout 2025 as Nvidia continues to expand its AI and data center businesses. The risks and rewards. Of course, no investment is without risks. While Nvidia's dominance in the GPU market is undeniable, it's not invincible. One potential risk is competition. Companies like AMD and Intel are working hard to close the gap, and new players could emerge in the AI hardware space. If Nvidia loses its pricing power or market share, that could slow its growth trajectory. Another risk is execution. There's a lot riding on the success of the Blackwell GPUs. If the launch doesn't go as planned or if demand doesn't materialize as expected, that could weigh on the stock. But here's the thing. Nvidia has proven time and again that it knows how to execute. From gaming to AI, the company has consistently stayed ahead of the curve, and I believe it has what it takes to maintain its leadership position in 2025 and beyond. Final thoughts. So, is Nvidia going to be the first AI stock to hit $4 trillion? Based on its dominance in the GPU market, the booming demand for AI technology, and the game-changing potential of the Blackwell GPUs, I'd say it's highly likely. But as always, investing is about balancing risk and reward. While Nvidia has massive potential, it's important to keep an eye on the competition and broader market trends. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights into the world of investing. Got questions or thoughts? Feel free to leave them in the comments. We'd love to hear from you. See you in the next video.